Hello, welcome to Business Finance. Now, I want to take this time just to give you a quick feedback regarding Chapter 2 discussion. Now, I found out that most of you were able to get this concept when it comes to determining the net income. And some of you probably had some challenges there. So I will take a few minutes just to try to address this as quickly as possible. So this is the information we're given in Chapter 2 discussion. We have a company here that has sales, there's cost of goods sold, there is selling and administrative expenses, there is depreciation expense, there is interest expense, and of course there's the tax rate. So, and I'm going to use my Excel document here to try to illustrate this again as quickly as I can. Now, we know that the revenue is 700,000, and we know that cost of goods sold is 70% of sales. And we know, and that should give us the gross profit. So if you think about the gross profit, will be the difference between the two numbers, between sales and cost of goods sold. And then we also given the sales and administrative expenses, and we are told they make up 12% of sales. So 12% of sales is selling and administrative expenses. Depreciation we're given is $10,000, and therefore to determine our operating profit, or what we call our earnings before interest and taxes, will be of course our gross profit less than the selling and administrative expenses less the depreciation expense. For the interest expense we're given, and that is $8,000. Again, our earnings before tax then is going to be our earnings before interest and taxes, then less our interest expense. That gives us 108,000. Our taxes, we were told tax rate is 30%. So if our earnings before tax is 108,000, so our tax then, our tax bill is 30% of our EBT, and then it gives us a tax rate of a tax amount of 32,400. Therefore, our net income, which is our earnings after tax, then will be our earnings before tax less now our tax bill, and that will give us 75,600 as our earnings after tax. So, and again, most of you were able to get to this number. I think the challenge part was the second part of the problem, where there were some suggestions on some revision of these numbers. And here we've been told that the firm hires a consultant, and here's some suggestions that the selling and administrative expenses are going to increase 14% of sales. And given this, then the sales will be increased to 750,000. So we know the sales moves up to 7,000. But remember, the selling and administrative will represent 14% of sales. So if you're thinking about the selling and administrative expense, then they're going to represent 14% of sales. So our selling and administrative expenses moves up to 105,000. In part B, we are also told that the extra sales effort will also reduce the cost of goods sold to 66% of sales. So our cost of goods sold uh, goes down to 66% of sales, and $750,000 is our sales. Therefore, our gross profit is going to be the difference again between revenue and cost of goods sold. Again, our gross profit I think is higher than what we have in part A. In terms of depreciation, I think we're given depreciation expense will remain at 10,000. So there's no changes regarding depreciation. And therefore, our operating income is going to be again gross profit less our selling and administrative expense, less, of course, our depreciation expense. Again, you can see our operating profit is higher than the previous uh, amount that we had in part A. Our interest expense, again, if you look at the problem, our interest expense will go up to 15,000. So again, our interest expense moves up to 15,000, and therefore our earnings before tax will be then our EBIT less our interest expense, and this gives us our earnings before tax. Our tax rate stays the same, so our tax rate is still 30% of our earnings before tax of 125,000. So therefore, our tax amount is 37,500. And therefore, is this change good for the company? Again, we can find out this by then taking out our earnings before tax, less of course our taxes, and that gives us our earnings after tax, which is the same as our net income in this example of 87,500. So if you think about it, yes, the suggestion by Ms. Carr I think is a good idea, because then our net profit or our earnings will increase. And how much is the increase? Again, our increase in this example is going to be, of course, an increase of 11,900. So this is a good idea if you think from that perspective. So I'm sure that you have an idea on how to go about this and how to determine this. So the only thing you have to do is to pay attention to what the question is asking you, because most of part 2 could have been dealt with if you paid more attention to what is being referenced to, because they were referencing to the new numbers, which is of course the SARS numbers. So I'm sure some of you missed this because you are looking at the 14%, based on old revenue numbers and not the new numbers. I hope this video helps you to understand this concept. Thank you.